Good morning, Warriors. Alexander, Ren, Kevin, how are you? How's everyone doing this morning? So let's take a look around. US dollar yen attempting to make a new high here. Yes, it is. Hiya, Paul. So you would think with the yen here that there might be a little risk off with what the S&Ps are doing the past couple days. Yeah. So maybe you guys took Blake's pip. Could that be it? Let's take a look around. Hi, how are you, Sinatra? All right, let me get this arena, Hugo. Okay, Blake's up a couple percent. This would have been nice to have been pushed to your phone, right? Or your workstation would have been okay, right? Hi, Brock. So he's in a full position, up almost 2%. Leandro's killing it. Okay, great attitude. Euro yen, Swiss. So all of these, I'm not sure you guys know it, but all of these pattern and plays, plus when important support resistance levels are taken out, you get push notifications. So, you don't have to be tied to your trading station or your laptop, or you could be out and about doing your business, and you have a lot of eyes working for you. So you're going to know when important things happen in the market. Push to your phone. If you just sign up and get our app. I don't think there are many FX subscription services that do this, that have their own app. Okay, you found your edge. What is your edge? Uh, Hello, Monica. Okay, from your lips. Okay, so, yeah, it's all emotion. So let's get back to the markets. I don't have to brag anymore about the team. If you guys have been around for a while, you know that there's talent across the board for all of these traders: Grega, Blake, Stell, Leandro, Andre. So I want to show what's happening in oil because we've had some pretty interesting action here with what happened in the Suez Canal. So here we are. Yesterday I posted that we could either get like a right shoulder here or we could get a third drive. Everyone see it? When I see this, I go, incomplete. Okay, here, one more. Dollar continues to work higher. And talking about the S&Ps, once we took out 3,900, that was not such a good signal. So, maybe we're headed towards 38. I don't believe this is going to be the final high, but you could call this a head and shoulders formation or so. 3,900 was big, so 80 from 39.10, gives you 38.20 down here. So very nice entry by uh, our commander in chief, Blake Morrow. So with the yen being up, it looks like yields want to pull back, don't they? Look at that 2 hour. Here's the 30 years, even a little weaker. So yields are coming off. So um, you want to take a shot. If you want to take a shot in the end, you have a pretty tight stop here. Maybe you give it a little tolerance over the highs, maybe a 40 pip stop. But you would think with risk off, with yields coming back in, that there might be one pullback. I'm bullish yen, but why can't we trade 107 and a half, 107 during this risk off phase in equities, and then blast off and break out over 110. Canada thought that, we've had a little pullback, but now we're marching ahead in Canada. The dollar's pretty relentless here. And they even tried to rally cable early in the day. To me, the big area in cable is still this solid blue line, a little bit above 135. Looks like a magnet to me. And euro pound still trying to turn up. If we get through this 86.40 level, I could make a case for 87.40. So we'll see what happens with this too. They tried to turn it back down, but it might be basing. And gold is finally, taking it on the chin. It's held up the best, but my preferred short because of the gold silver ratio was silver. So silver much weaker all week. Okay, much weaker all week. Look, making new lows. So if you don't do it, it's important, just like when you're trading the pound and the euro, that you pay attention if you're a precious metal trader to what's happening in the gold silver ratio, right? So I've been pounding the table that I thought we'd have a breakout over 68.5, and it started yesterday. So let me just quiz you guys. When gold silver ratio is going up, which precious metal should you be long if you're bullish? And which precious metal should you be short if you're bearish precious metals? Gives you your preferred long and short. That's right. That's right. That's right. Okay. So I don't see why we can't continue some type of pretty major rally, at least maybe back to we're above this moving average, back to here, maybe 76. Okay. But I still don't think gold's a buy. It doesn't make it a buy. It just gives you your preferred buys in silver. I'm bearish both still. And here's why in the gold. What kind of low did we have here at 1680 on the daily? So I think we're going to take it out. All right. Although silver's already done it, I still think gold's going to do it. It's just not as weak. So just like euro pound doesn't tell you whether or not to be long or short the dollar, just tells you what your preferred longs and shorts are between the euro and the pound. Same with the gold silver ratio. Okay. That's your lesson for today. Any questions before I turn it over to Blaker? I'm live from the high desert of Southern California this morning. How are you, Blake? I'll be sharing the summer heat with you this year.
So the high desert.
Could both. Yeah. Well, you go to the desert and bring medical marijuana with you. Makes it the high desert.
That sounds like a great place to be. Bring a bag of Doritos.
Okay, I'll bring munchies, man. Don't worry.
Bring some munchies. Okay. Anyway, today is interesting. I was telling the guys and gals in our chat room just a little while ago that, I mean, it was a quiet night first and foremost, but I was telling everybody that this is like the first session that I can remember in a while that we came in and North America started selling instead of buying. So it's an interesting dynamic. And I also want to say this.
Good observation. I didn't even think of that.
Well, and I want to bring up another observation that we talked about during the daily roundup. Now, so you guys know, for those of you guys listening in, let me just go to our webinars here. So we have actually there's a few webinars that you have, and there's one that we haven't added here. We have the European crossover, this just for our clients. The face webinar, we have the roundup, which is for our clients, and then we have Trufo, which is a public webinar, which is our Spanish webinar. Now we also added the Morning
Morning
Edge,
Edge. Yeah.
yeah, which is in about an hour's time from now. That's also for clients only. Now we do post these on YouTube, so you can go out and see them after the fact, but it's after the fact, right? So yesterday, during the daily roundup, and this is before the U.S. markets closed. Obviously, it's about 2-3 hours before the markets closed. I said, you got to watch it here. What the behavior has been changing in the market over the last couple of days, and I wasn't sure if it was going to yesterday, but I told everybody, I'm like, hey, at the end of the day, what we're seeing is we're seeing whatever gains that we've seen early in the session give it up at the end of the day, the last couple of days. And that behavioral change that you're seeing in the marketplace, it takes a while to and Andres just brought up something that I wanted to talk about here in a second. By the way, Bitcoin is hitting new trend lows, so I'm going to talk about that here in a second. But I want to talk about this behavior. It starts to change, but once it changes and sentiment changes, it's hard to change it back. You always hear people talk about, especially if you listen to Bloomberg or CNBC, oh yeah, the inflation genie. You get the inflation genie out of the bottle, and it's hard to put it back in the bottle. And I get the analogy. The other analogy that you should be really thinking about from a market's perspective is when the sentiment changes in the market, it's really hard to change it back. And so when you start getting instead of buy dip mentality in the market, a sell rally mentality, that's where it changes. And and it's hard to get it to change back. And that is kind of what we've seen this week. We've seen the markets, people buy early on, they get long risk, and I'm just talking about risk in general. And I'll get to the individual currencies here in just a second, but they talk about they come in and they buy stocks and then they sell them a little bit later in the session. What happens is when you're buying those dips and then by the end of the day you find yourself flat or even negative, your behavior is going to change. You're going to stop buying the dip. You're going to instead of buying the dip, you're going to start selling the rally. So at that point is when you start getting that change in behavior. And when you start seeing that change in behavior, like I said, it's hard to contain. And so what we're seeing in equities, we just saw equities push a little bit lower because, yeah, I mean, North American traders got in this morning and they go, wait, whoa. Wait, we didn't rally in Europe. We always rally in Europe. We didn't rally in Europe. I was expecting to get up this morning and be up, 30, 40 handles in the S&P, and I got to hit the bid. So now you're hitting the bid. Now, I also want to mention that Bitcoin, and I know I've talked a lot about it with you guys during the week ahead video for the last 2 weeks about the importance of 52,500. It's so important that, even, in our live stream, you can see that, when Bitcoin cleared the support level, we were sending, live alerts because this is big, when we're clearing this kind of support. And I know I've talked about it a lot here on the on the Face webinar. This is more about sentiment. This move that you're seeing in Bitcoin is not about, Bitcoin so much. It's about the mentality right now of the markets, and what the market is perceiving as
Like buy
taking on
everything, like
risk or selling risk. What's that, Dale?
SPACs, like SPACs and NFTs and Bitcoin, kind of,
Yeah, it's all
you
the
know what I mean?
same. You can
Yeah,
you can throw it all in the same bucket.
yeah,
If you're buying Bitcoin, or somebody just asked, GM just asked about Ethereum. Ethereum's right on pretty much channel support too. It's Ethereum below like 1,500 is going to get crushed. But this is all, you can throw it all in the same bucket. It's all it's all risk stuff. It's and I'll say it again. It has nothing to do with, oh, Bitcoin. What do you mean Bitcoin's worth zero, or I'm bearish Bitcoin? No. It has everything to do with the market's perception of taking on risk. And when Bitcoin comes down and it starts to break down, that is like the equivalent of in the .com bubble when Yahoo would sell off. Did Yahoo go out of business? No. Well, eventually they sold for way less than they should have. But anyway, that's neither here nor there. The point of the matter is, in the .com bubble, you watched key components of the .com stocks as they fell. You knew that risk was coming off if you guys were trading back in the late 90s, early 2000s. And the same thing here. You start to see Bitcoin come down and you're like, holy cow, this is where the market's really signaling that they don't want to take any risk. Yeah, when they're not buying the riskiest assets out there. And again, it's not saying Bitcoin's going to zero. It's just Bitcoin and cryptocurrencies are seen as the most risk assets out there. Yeah, you got Ethereum and all these altcoins. They could be punished. I'm going to just tell you guys from a technical standpoint. God, I hope Bitcoin makes a slide down to 3,000, 20,000, somewhere down here towards the breakout point. I really do. I want to be long, but I also want to see all these TikTokers, stopped out. I really do, because, when you have these, kids using astrology to forecast future prices in Bitcoin, that crap's got to stop. I'm sorry. That is ridiculous. The most ridiculous thing I've ever heard and seen in my life. And I've been around.
Did I tell you, Blake, that my a friend of mine that is also an ichthyologist, he bought cryptocurrencies like a couple of weeks ago, and he's not a young guy. He's like 46 years old. He's a very good ichthyologist. He makes very big projects, like big aquariums like the ones you go see in big malls, and things like that. And he was perfectly honest. He's like, I'm working like all my life, etc. I want to have a chance of like making a lot of money.
Want to be a millionaire?
Yeah, making a lot of money.
That's right.
Yeah. So he asked my opinion, several weeks ago. I told him I wouldn't be buying here.
That's bull. You said you'd be buying it and going long, and it was going
long. Yeah, exactly. But he nevertheless bought, and he's now out of the money. Obviously.
Well, and I'm telling you, he's not the only one. And I know I tweeted about it, and I said, hey, when stimulus checks started hitting that was the high. Soon as, and I'm not. I don't think it's the all-time high. I really don't. I actually think Bitcoin's going to be an investment type of vehicle like gold. I mean, it just is, and we'll break these highs at some point.
Count me in the side of skeptics having to do with that.
Well, I know.
I'm not saying it's impossible, as long as the environment.
That's a news flash.
Yeah, as long as the environment is the one it is at the moment, anything is possible.
But
breaking news: Steve Volke's skeptical.
That's neither here nor there, and it's not the conversation I want to have right at this moment. What I'm saying is, this high was really put in when the stimulus was passed, and everybody knew that, hey, we're going to be getting stimulus checks. That was the weekend high, and I tweeted about it. I'm like, this is where all the suckers get in,
Indeed.
And I wouldn't be surprised if we spent the next 6 months doing this.
Yeah, consolidating
at lower levels before moving higher again. I wouldn't be surprised. Now, that doesn't mean it's going to happen. I'm just saying that would be, and Steve may be 100% correct here. That may be the ultimate high and the generational high if governments step in and they say, hey, we're going to start taxing this thing. We want, they start downplaying cryptos, whatever, because, look, the way you have to view this also is cryptocurrency is moving in on central bank space. So, however you want to view that, I do think that that's a risk. Anyway, I'm going to leave that here. I want to talk about just one other thing, and I'm going to turn it over to you guys. I know we've mentioned a lot about it, but since Tracy's going to be here talking about crude oil, I want to talk about, the blockage in the canal. And, people are like, hey, well, crude, I was talking about like the Canadian and, and crude oil being above 60 was a gift for shorts. And they're like, well, but what about what's happened in this, in the Suarez Canal? Did I say that correctly? Did I pronounce that correctly? Suez Canal.
Yeah.
So, what's happening there? I'm like, so do you think that's not going to get fixed? Do you think that they're not going to, dislodge that and open it back up again? No, they are. So this move that you saw yesterday in crude was just a spike that you could sell into, in my opinion, because what we are seeing here in crude oil is a change in trend as we're hitting new lows, lower lows, lower highs. We broke a trend line. We're probably going to be heading back down towards 50 or maybe even the 40s moving forward. So, then you have to start looking at, commodity currencies like the US dollar, Norwegian krona that is, struggling here to stay down. I mean, if crude starts to come down, Stelios wrote a great post on this the other day. Yesterday, I think, the dollar Canadian, we have our descending wedge. Everybody knows that I'm bullish here. Well, if you're a Forex analytics, trader, I'm long, and a break above 126 is super bullish. So these are things that, if crude does come down, and we're going to hear what Tracy has to say today, you got to keep these currencies on the radar because these commodity currencies have been underperforming. This is my chart of the day yesterday. It's a big.
It is indeed perfect timing to have Tracy here because finally we're seeing a pullback in crude. So I really want to hear her take in. First of all, what's the short-term direction and the factors that should affect it in the shorter term, and second of all, if anything has changed in her longer-term view having to do with.
Well, you see, I planned this when I booked it 3 months ago.
You knew in advance.
It was going to be a very important day to have my trading warrior sister here. So
indeed, ride the curve said it's canal constipation. I'll laugh my ass off. All right. So anyway, hey,
not
Steve,
funny.
Good morning, Stelios. Good morning. So what are you guys? Good morning. What are you guys thinking here? What's happening? What are you thinking with the markets? And I don't know if you heard what I was saying earlier. We got up. I'm in, obviously I'm in Arizona, I'm in North America. I got up this morning and this is what I saw. And I'm sure I wasn't the only one when I got up this morning. I got up this morning and we were trading around, 3,900 in the S&P. And I was like, that's weird. How come the S&P isn't at 3,940? How come we haven't rallied like 30 or 40 points in the S&P? Because we always do.
It's broken.
It is broken. What's going on? I mean, we usually rally in Europe and we sell to those sucker Europeans every morning, but they didn't buy this morning. So what do I do?
Bastards.
So what do you guys think about the price action overnight?
I personally think the bigger picture, and good morning, everybody.
Good
bigger
morning.
Picture hasn't changed for me. We're still in an uptrend, but it's starting to look a little bit more nervous, the market, and there's plenty of reasons to be nervous. Actually, the only reason not to be nervous is central banks just buying everything. So I don't think, unfortunately, because I'd love to see a nice correction lower, I don't think, unfortunately, we've seen something major or some, I don't see the signs yet of, hey, this is happening. So for now, I'm still a bit cautious and watching price action.
How about this, Zell? Yields are pulling back a little bit. That maybe after this pullback in yields, we had a pretty good first wave. That the next wave to the upside in yields, should that occur, might be the pin that really pops things.
Well, I agree with that. Remember, we're talking about 10-year around 150-ish or 150 something, which was a breakout. We broke out. We went to 175 or whatever it was. Now we're back to 160. And yes, I agree. I think we're going to retest that breakout. And then if it does go higher, then equities have to take notice. They just have to.
And it's interesting that you point that out, Stel, is that some of these quote unquote yield sensitive currencies like the dollar yen and like the dollar Swiss are right at their highs. I mean, if you I can't tell you the number of people that I've heard in the last week that are like, I'm going to short the dollar yen because it's up against a multi-year trend line, and it's rallied so much it's got to come down. Oh, does it?
Yeah.
Does it got
that
to?
formation doesn't look that bearish to me.
No, it looks extremely bullish.
Yeah.
This is just a consolidation of recent gains, and you want to think about like you want to have a squeeze fest right here. Is you break above this 109, 109.30 or 40 level, you're gonna be trading above 110 really quickly. But it's not only the dollar yen, it's the dollar Swiss. How many people are weighing are trading the Swissy on the short side? You look at this. This is a broken multi-year from 2015 trend line. We broke it, and now we're testing the underside of it. We break above 94 cents and we're trading back at 96. So
there is an extra element to take into account that can make it accelerate even further. Pull up the Euro Swiss, Blake.
Right here. There we go.
Look at what formation we have there.
Yeah, we have a nice little pennant. We do. And, I don't follow the Euro Swiss all that often. And you can see we completed this,
yeah, but that formation doesn't look bearish to me either. You know what I mean?
No, this is a nice bullish pennant. And so, yeah, back above 111 is probably gonna, trip some stops. So I'm real, just going on to what you were saying and building on to what you were saying, Stelios, is that yields, still look pretty bullish. So you feel that we might come back down towards 150?
Well, we're almost there, right? So yeah, I do think we might have a little bit more, but that's the test, and I think we are going to bounce. I agree with you.
Yeah. So, now what could, and I'm going to ask you guys this, what could turn yields lower from here?
Risk off.
Do you think bonds find a bid here? And we do have
Yeah, if we went to 3,800 in a hurry, 3,700 again.
It has to be. It has to be kind of violent risk off. If it does, then bonds will get bought, hand over fist.
Well, we do have I think we have a 7-year auction today, right? Is that today?
I can't remember.
I think it is. And it's kind of a big deal because of the last auction was a crap show. So I'm somebody correct me if I'm wrong, but I think that's what we have going on today. And speaking of goings-ons, we have GDP numbers that are expected here, and GDP is always looking into the rears anyway, but we have final GDP coming up, and the Fed's upgrading GDP forecast to over 6% later this year. So that's going to be interesting. That's why we should keep rates low, because our economy is.
Speaking of which, Blake, one of the reasons the market doesn't seem to be buying the dovishness from the Fed, in my opinion, mistakenly, because I've said many times in the past that I expect the Fed to actually do nothing, even when they have to. But that's a different conversation. Is its own predictions. I mean, think about what they've predicted for this year. They've predicted that we're going to end the year with 4.5% unemployment, which is a very low unemployment level, right?
Mm-hmm. Yep.
With 6.5% GDP growth.
Yep.
And an inflation of 2.4%. Those are the own predictions from the Fed. So at the same time, the Fed is trying to persuade that this year we're going to have one of the 5 best GDP growth years since World War II. Unemployment is going to be at historically low levels. Inflation is going to be above target, but they're not going to be doing anything. Personally, I believe them in this. I believe they're not going to be doing anything even when inflation hits 3%. But the market isn't buying it. You know what I mean?
Yeah,
That's the
no,
problem.
I agree. I agree with that. And I find it rather interesting that you have the Fed, just their forecasts are moving so much higher, yet you are, they say one thing, they write down another, and they expect the market to believe it. And okay, hey, we got jobless
claims a little bit better, 684 versus 730 forecasted. Previous one, though, revised a little bit worse to 781.
GDP beats. I mean, look.
GDP deflator lower. Okay, yeah.
And PCE prices are a little lower as well.
Yeah.
But I'm in the camp that good data is bad for stocks. That's all there is to it. Good data is bad for stocks. That's the way we have to look at it moving forward. So, and remember, data matters. And remember, despite what your mom told you, size matters too. All right. So, I know your mom always just wanted to make you feel better, but Tracy should be here, right, Dale?
She is, yes.
I'm sorry, I didn't mean to talk about. I should have picked a different day to make those types of jokes.
You're fired.
Before Steve.
Tracy's tough.
Yeah, I know. She's a tough cookie. She's been around forever.
Yeah.
And I say that in the nicest possible way. Sorry, Tracy. Hey, listen, guys. Before I let Dale take over and Steve Stelios and I bow out, I just want to make sure I mention that if you haven't visited our sponsor that makes this happen, our sponsors, we have Pepperstone Securities, which if you're outside of the US and Canada, open an account here through our website, then you can get Forex analytics for free, premium service for up to 4 months. And if you're in the US and Canada, visit Forest Park FX. They're like the concierge of brokers. Basically they'll handhold you and say, hey, what kind of trader are you? And let's find the best broker that's going to fit your needs. And they're there for you. They're like the customer, the red carpet customer service that you'll never get from any other broker. They'll handle it all for you. So anyway, all right, guys, it's all yours. And all Tracy, right. Good morning, by the way. It's nice to have you here.
Good morning.
Good morning, Tracy.
Good morning, guys. Thank you.
Good morning, Tracy.
I just have one question for you before we surrender you to Dale.
Surrender.
When do you think crude hits $100?
So my target isn't that high, but I think that 75-80 in
is doable.
2 years, 2 years. I mean, I'm bullish longer term, but this pullback is absolutely welcome. Oil
indeed,
got a little too ahead of itself.
Hadn't given us an opportunity to buy in a very long time.
Right.
And I look, I'm with you. I think the whole commodity complex is going to come down a little bit, but that's going to give us all opportunities to be on the long side. I'm a firm believer that commodities are going much higher in the months to come. So, all right. Thanks, Tracy, for being here. I'm going to bow out.
Thanks.
Sorry.
Okay, Tracy.
Okay.
Welcome back.
Well, thank you. Thank you for having me again.
Great to have you. So like I told the guys, I planned for crude to be at an indecisive place for you to be here. So, we have this pullback in crude. So now we know that you're still constructive long term.
Yes.
I pulled up the chart here. This is the daily on WTI. You think we could see crude print under 50?
Dale, we just see your
I can't see your screen.
Yeah.
New share. Okay. How about now?
Yes.
There you
now
go.
I can.
Okay. All right, Trace. So, we had that, had a little divergence up there. First of all, let me validate that you were very constructive from, 20 lower or so, and switched your stance on the crude before the major rally really, or during at the beginning stages of this huge rally that we had. Do you think we could see Prince back under 50?
I think that they're going to buy anything below 60, right? So if you start getting into like 52, you'll probably see a lot of buyers show up around that 52, 50.
Yeah,
I
I
don't
see.
think they're going to let it get much lower than that.
Who's they?
Who's they? You know
Yeah.
my OPEC theory. When I said the market didn't stop rallying after OPEC said, go ahead, make
Yeah.
my day, try to short this market.
Yeah,
So
yeah.
that's
So
the-
that's they?
That's my conspiracy theory day.
Yeah.
But yeah, I mean, I'm still constructive long over long term, but my time horizon is probably a lot longer than most people's.
Okay.
I'm looking, another, the next like 3 years out.
3 years out. Wow, that's, that's
Yeah,
almost
so-
makes you like a Nostradamus.
So for me, I'm a buyer on pullbacks. So again, this is a very welcome relief. Oil got a little too ahead of itself. But over the long term, even with ags, I see, agriculture, the play over the long term as well.
Oh yeah, okay. So you're broadening out your commodity theme to grains now.
Right, but I'm not actually trading grains.
Okay.
I'm in fertilizers and farm equipment and equities.
Okay.
On the equities.
Okay. All right. So fertilizer also takes oil, right? Besides a lot of these chemical
Yeah.
I mean, some of them are oil based, right?
So they're chemical based, right? Yes.
Yeah. Yeah. So there you go. There's corn.
Yeah. I mean, corn's.
Yeah. There's wheat. And here's beans into teens. Remember, Trace, that used to be a big, used to be a big war cry on the CBOT floor.
Yep.
All right. Okay. So you're still a bull, and
I'm still a bull, and I'm a buyer on pullbacks. I could definitely see, a pullback to 52, 50, that 50, 52 area.
okay.
But we'll, have to see here.
Is a strong dollar part of the equation? I know that long term, you're a dollar bull. And
well, I think that, the dollar move is important. Really, what I think right now is the bond market is moving everything right now.
okay,
I think that's literally the driver for most commodities, except for ags right now. And I think that's moving the equity markets as well. Obviously we're starting to see a bounce here. And the thing is the boat is so overloaded short, right? That, we could see a fast and furious move up in bonds, which would definitely spook, equities and oil, very much so, because
kind of a little whiff of deflation.
Yeah, well, oil's an inflation hedge, right? So
Right.
if bonds move up, then people are going to have to start removing their inflation hedges. And that's oil right now.
Okay. So actually, we've already had a little turn in the TLT, which is a proxy for 20-year bonds. There's an auction today, but as you can see, we did not confirm the last low. And this has been one heck of a move. I mean, it's one of the only markets, Tracy, that took out the COVID crash low.
Yeah.
And, the Fed was more successful in holding up corporates and junk bonds than their own market, the Treasuries. Any
Right.
comment on that? Why Treasuries are weaker than corporates and junk bonds?
I just think it's I think it's a function of yields and whatnot. I mean,
Yeah.
I'm not, the auctions have been okay, not that great. We have a 7-year auction today, which 7 years is a very hard auction anyway. So I think
Who's buying them? Who's buying them? China's not buying them. Who's buying them?
China's still buying. If you go to the Fed's website and you see they've actually been steadily increasing their purchases over the last 6 months or so. So they are still buying, contrary to what everybody says on Twitter. You can literally go to the government's website, and it has it right there.
That's interesting because, I was talking to Harold earlier in the week and he said that the Chinese are buying the JGBs.
They could be buying a lot more
Yeah.
of those. I mean, I haven't checked that market, but they are still buying U.S. Treasuries. They're not.
All right. So that's a
not selling.
fallacy that people are saying that the China's
That they're
not
dumping
a buyer.
them. No, and then
Okay.
perhaps they're not buying to what they used to be buying, but I
Okay.
mean they're not dumping them. They're still purchasing them, even if it's in smaller amounts.
All right. Long term, you've been, a euro bear. Here's the euro. What are you
I
thinking
know,
in here
right?
after this pullback here?
I don't understand why the euro's this high, really, looking at Europe, but but
Okay.
anyway, I mean, I guess we could go to I don't know, that kind of looks like it could be head and shoulder-y forming.
Yeah.
But I mean, as far as the US dollar, I flip it to the US dollar side.
Sure.
As far as the US dollar is concerned, I don't think that we're going to get that high. I think we may slip up into that 93, 95 area, kind of where we traded a lot. If you
Right
look
here.
left, right?
Yeah.
But I don't think that the difference with bonds than the dollar is that people have leveraged funds have now switched long the dollar. So you don't have everybody short. So you're not going to have that. You don't have that risk of a big short squeeze, right?
Okay.
So
right.
I think, and I don't think they're going to let the dollar get too high, but Yellen has been saying, I want a stronger dollar. So it's not.
Why? Why does she want a stronger dollar? Doesn't it help? Doesn't help our trade balance at all. So you have no idea why she wants one?
No, but she keeps saying it. So I think that's a lot of reason that we've seen some of these funds kind of switch their positioning, right?
Okay, so this is based on the COT, a lot of the because we had didn't we have like record shorts in?
We had record shorts. Now we have leveraged funds are leaning long.
Okay, well, they could be right for a while. They were right for a while on the way down. Why can't they be right for a while on the way up? Right? Okay, so anything else that's on your radar that you want to talk about? We've talked about yields, and you really, that one of your quotes, I remember one tweet when gold was getting hammered, and your comment was, it's all about yields. So you even take yields into account when you're, commodities. I remember when we were having crop problems, it didn't matter what yields did.
Yeah, I mean, I think it's different for ags. Right.
Yeah.
I mean, the ag market is kind of acting differently than most other commodities are right now.
Yeah.
So, I mean, if you look at gold to me right now is, a bounce in bonds will certainly help, but it's kind of stuck.
Yeah. It's, we've been moving lower for a while. You think we could, we had this recent low here around 1680. But compared to silver, Tracy, it's holding up pretty well. There's silver,
right.
There's gold. So silver being more of an industrial. Any reason why gold might be holding up better than silver in your mind?
Well, I think it's a different kind of, I mean, they're both precious, but because silver has more commercial uses, it's often lumped into that same kind of category. And, we're seeing a pullback in copper, we're seeing a pullback in iron ore, so a lot of those metals right now, we're seeing a pullback. So it doesn't really surprise me that silver's probably not hanging in there as well as gold is.
Yeah, well, I was talking about when everyone was finally embracing the reflation trade, it paused.
Right.
In all of these markets. I mean, people were finally buying. Yeah, we're reflating. Commodities are great, and and then the corrective process began. So, any idea as far as timing for corrections in these different markets, oil and gold, and maybe even the ags pull back a little bit, like a 2-month, 3-month type of breather?
Yeah, I mean, typically, for oil, if we look at seasonality, typically we see pullbacks in, March, February, March, or March, April, right? And then when we start hitting summer driving season, right, demand picks up, et cetera, then we start seeing, a bounce in crude oil and products. So I think that will be the same, especially with especially if we're going to start seeing Europe opening up again, right? In May, June, supposedly.
Yeah,
Hopefully.
hopefully,
Uh,
yes.
but
Are you gonna take the vaccine?
so I'll keep that personal.
Okay. When I did, and I got my second shot, I asked if it would inoculate me from losses, and she didn't know what I was talking about. Anyway, there is something called a February break that was kind of like a theme in commodities. Am I remembering it correctly? We used to call it a Feb break. Are you familiar with that?
Yeah, I mean, we used to see a pullback. I mean, this year is kind of like
Late.
seasonality is kind of all messed up because of
Yeah.
last year, obviously. But yeah, I
Okay.
mean, we used to see, that's what I mean. We used to see that pullback. Like I said, it would either be like starting, mid-Feb to mid-March. Now that's kind of moved up a little bit because they started moving maintenance season, right? So maintenance season used to start in February. Now it's kind of starting in March and heavier in April. So that's kind of where we're seeing when we are seeing the pullbacks in crude oil.
Okay, so this is a little bit out of your bailiwick, but what do you think to yourself? Because I know you're a veteran, a market veteran, you've seen several cycles in your career. What do you think when you see cryptos blowing off, becoming parabolic, and things like SPACs and NFTs? People paying $1 million for digital art and spending that kind of money for tweets.
69,
yeah,
69
didn't someone buy?
for a cat or
Yeah,
something?
yeah, didn't someone buy your first tweet on Twitter for $1 million, Trace?
It's not. I wish.
Anyway, I mean, what kind of have you ever seen an environment? Does this remind you of anything?
I mean, it reminds me of any other kind of blow up that we've had, right? I mean, we've seen this in crypto before when we, not to this extent, but we saw it in 2017, right?
Yeah.
And then we had a big pullback. I don't trade crypto, so it's not really my market, but I wouldn't be surprised to see some kind of pullback there, as well as we're seeing pullbacks in some of the other markets, right?
Okay.
I'm hesitating to call it a commodity because I understand it's money too, but it does kind of follow the commodities markets a bit.
Okay. What do you think of the S&Ps here? Just a quick think on that.
Is that the daily? Yeah, I was
Yeah.
just looking at that this morning intensely. I think, we kind of need to hold here.
Yeah, it looks that way.
Or around here to make the next move up. Like that RSI divergence is kind of has me spooked a little bit.
Okay, I want to show your website and ask you how things are going with hedge fund telemetry. Okay, so this is where you could find Tracy's work. How's it going, Tracy?
So good. So I cover energy and materials now. So not just energy. So I also cover, all materials, which includes metals, et cetera, et cetera.
Okay. All right. Is there, how do people try it? Is there?
Yeah, you can, there's a 2-week trial you can sign up for. If you just go to subscribe, and then at the bottom there's, let's see, if you go to subscribe, and go to my page.
Okay.
There you go. Sign up now, and then there should be a 2-week trial on the bottom.
Okay. I think I'm going to take it.
It does.
I think I'm going to take it. Seems that we cannot find what searching help. Okay. It must be my computer. Anyway, I just want to thank you for being here. So we should be looking for the low 50s in crude to sum it up.
So I mean, if we don't, if something, I can't guarantee that, but
no, you can't guarantee anything except anything and everything can happen.
But exactly, I mean, anything can happen. It's crude oil. Anything can happen tomorrow, and
right.
Who knows? So, but definitely, I would say I'm a buyer on dips, and in the 50s, certainly.
Okay, and do you think there's going to be any political dynamic that might change with the new administration and Biden in there rather than President Trump, with, you know, either Saudi Arabia or what's going on in the Middle East.
Well,
Any
yeah, I mean,
comment on, you know, he's been pretty you know, sharp in his criticism of, you know, adversarial relationships, except he did not go all the way with the Saudi prince. He just put out the article, but, you know,
right.
no sanctions or anything. You think that's a sign that,
Well, I think there's definitely going to be a different dynamic, a different relationship, you know, with Saudi Arabia, with Israel.
okay,
You know, I think it's going to be a little bit of
more contentious?
yeah, a little bit colder. But obviously they're, you know, they're our allies, and, you know, we'll be happy to
Yeah.
supply them with weapons. So
Yeah, right. We'll sell weapons. So probably no chance of the Saudis in any way or shape or form trying to accept payments in anything but the dollar.
well,
think?
yeah, I mean, they're not going to change the you know, the what they sell it
Petrocurrency.
in, right? They're going to
Yeah.
sell it in dollar, even if even if they're paid in another currency, they automatically turn that over and put it, you know, transfer it to dollars anyway. So, you know, they're not going to stop selling oil in USD.
Tracy, thank you so much for coming in here and talking about all these different markets. Anything you want to wrap it with?
No, I think
Okay.
that's good.
Where do you have any targets? I know long term you like gold. Would you like to buy it say around 1600 or so? Would you start nibbling at gold?
Yeah, for sure. Yeah, I think that would be a
Would you
good.
back up the truck or your
I
race
would.
car?
I wouldn't back up the truck, but I would definitely start. I mean, I already hold some gold, right? But
Yeah.
if we started taking a dip, I would definitely add to that.
Okay. I just got a little notice from Charlie Gasparino that the White House is now talking about a $3 trillion bill, probably for infrastructure.
Right. And
Trillion.
if that passes, sign up for my get you in.
Okay.
I'll get you in the materials sector. No,
All right.
if that passes, and I read it before, you know, I would start looking at materials like you know, big equipment like cat.
Yeah.
Oil's going to take off because we need asphalt.
Right.
You're going to need a lot of steel. So that would definitely give the commodities markets a boost in the US for certain.
Okay, back to the 70s with Tracy Schuchart. That's what it reminds me of. I know you're not that old, but I was on the floor then. And, you know, anything that you dropped and it hurt when it hit your foot, you wanted to buy it. So thanks very much, Trace. We'll
Thank
get
you.
together in a few months. I'll try and time it for another inflection point in oil. Okay?
Right? Use the
All
good
right.
skills.
All right, everyone.
you.
Tracy Schuchart, could follow her at Chigirl at CHIGRL. And that's a wrap for today. Everyone have a great day trading. Remember, don't just count your barrels or your dollars or your Krugerrands, count your blessings, and we'll see you all tomorrow. And you could join the team for Morning Edge in about 20 minutes. So thank you, everyone. Thanks again, Trace.
Thank you.
Thank you, Tracy.
Thank you, Steve. Thank you, everybody.